In your SME book, what percentage of loans is asset-backed versus non-asset-backed, working capital, etc.? What sectors have these been extended to? I think wherever possible, we would assess the working capital cycle of the SME account and work on our facilities based on the working capital cycle. So there can be situations where if the customer is unable to substantiate it with their financials or their cash flows, naturally that's where we have to rely on some sort of a secondary repayment source, which is some kind of asset mortgage. So always we look at the cash flow based lending. We look at the cash flow, so that's the primary source of lending. And secondary source, the security is coming only as a secondary source of lending. So there's no hard and fast rule of what percentage should be backed by asset, because as we grow our book, naturally we need to look at the cash flows. But in case of a distress situation, that's where a security comes and help us to assist the recovery process. So it's a very balanced and scientific way of evaluating credit, and I would say that quite a significant number of small accounts are quite well secured in terms of our exposure to smaller branch level customers. Quite a number of questions, so I'm trying to read what is the private sector interest rate heading. Some of the questions are actually repeat questions. So, how much of your loan book was capped at 24% interest rate? A very interesting question. We are yet to review that, by the way. So, thank you for that question. I would say the entire book is capped at 24%. So, if you look at the rupee to foreign currency, currently 75%. So, that entire 75% was capped at 24. So now it's a market-based situation. But one has to be very careful not to go and just whack the customers because they are unable to pay it on time. So one has to be very careful, otherwise it will come in as a potential NPL. So I think all banks are taking a very practical approach here. Just because the cap is removed, I don't think any bank will take that as a license to go and charge higher rates. We are very responsible in that manner. So we would continuously look at who has to be priced appropriately and take a call. And that's why even the central bank is also monitoring this to ensure that all banks adhere to a very practical approach of having now that the cap has been removed. So we would also follow very strictly how to handle this. But of course, where there are cases where deliberate intention to withhold payments or delay payments, naturally that's where we have to make use of penal interest rate to pressurize such clients who are intentionally deferring payments to get their payments faster. Do you have plans to go for further foreign borrowings? Right now, since one of the areas that we are focusing is the rupee to foreign currency mix, and more on the rupee side, I don't think there is a need for us to consider more foreign borrowings. In fact, we are looking at some of the existing borrowings that we already have, whether it justifies to have it in our books, or whether we can look at repricing them. So that's actually assessment that is currently taking place. not really to go for fresh foreign borrowings. Impact on IFRS 9. Okay, there is a question, what will be the impact of the IFRS 9, if I'm not mistaken, change on NPL recognition, if any? Have you done an assessment?
Yeah, NPL recognition, if I start it, that will be as per the central bank guidelines. On IFRS, on 9, we have engaged Ernst & Young, and they are currently reviewing our portfolio in detail, and models are being developed. So the impact will be known actually by the latter part of the year.
What was the reaction? Huh? Yeah, now, there's another question. Is there a difference between the NPLs as per IFRS and CB requirement as of now in your books?
As I explained before, NPLs are, it's a time-based classification as per the current central bank guidelines. IFRS provisioning is on the total exposure based on the sectorial, how the sector behaves and the performance of the sector and how the loans are settled. So therefore, we cannot relate the NPL classifications and IFRS accounting for impairment. However, currently, since the central bank guidelines are in effect, we have to follow both methods, so we are complying with both regulations.
There's a question on your current ROE is around 12%. Actually, it's not 12%. ROE is about 14.5. And second part of the question is, given you are planning to achieve 18% ROE by 2020, at what average loan growth for 2018 to 2020? There's a question on that. Actually, there is not above average growth rate. We are looking at average growth rate. We are taking consideration what the regulator is also expecting, and also curtailment of the growth rate in the second half this year. And it should be so that our assumption is to be in the level of industry growth rate, but the main improvement is coming from the NIM, which is currently 2.7. So that's where significant improvement is coming from. So even with industry level growth rate, we are comfortable that we should be able to deliver those numbers. Other one is the business mix. That's where part of the improvement from NIM is coming from more of a corporate high-end market to the retail and SME space, where you spread your risk, at the same time make use of a reach to work on more SME and retail-based lending. I think these are the questions that we have received. Okay, there's another question. What is your target NIM by 2020? Target NIM is actually the industry average. We are looking at around between 3 to 3.5%. So that's the current industry average. That's where we want to be. Right. So we had quite a fruitful discussion on this, in providing clarifications. So thank you all for your participation. And we would also have a press conference on 1st of August at 4 o'clock at Galadari. So if you have any additional question, naturally you can clarify those. Would like to invite you all for that as well. But thank you for all the questions, and I hope that you had a lot of clarity about our growth, and it is actually a very significant growth when you compare the industry situation and bank as a whole. And this increase, the growth has come from all fronts, corporate, project finance, retail, SME, all the business segments have contributed to this growth, and the entire staff as a team has contributed to this growth. And now that we are working on a strategic plan, there are a lot more improvements that we are working on in terms of how we deliver our services, the service quality and all. So all in all, we would expect much more improved results going forward. So keep on delivering good numbers. So that's the plan. So thank you very much for your participation. Thank you.